So one of the things is that no, the amount held by because of the Russian trade surplus, in sense, so that is there in the system. So that is how does that get out? Like, and whenever it gets out, how do you really plan to act, and how do you expect it to play out?
No, in the sense that you mean what is held by in the Vostro accounts?
So it's in rupee. So it has to go out somewhere. Okay. So
I think it's become a part of the system. It will be a normal situation. And in any case, any trade relation of India with any country is not a short-term trade relation. It's a long-term trade relation, whichever is the country. So therefore, there is no reason to expect that suddenly a country decides to pull out. Why should a country pull out? It's a continuing trade relation. So therefore, we don't see any stress or any concern with regard to the quantum that would be held in in the Vostro account from various countries.
Give a slight indication of how much of that money is in T-bills.
No, it's not proper, as my colleague Deputy Governor Ravi Shankar said. It's not correct on our part to say which country how much they have invested in T-bills. No, it won't be possible. It's not correct.
Thank you, sir.
You want to add something?
It may not be accurate to think that the trade surplus is staying in the country, because a large part of that is oil. Up to the global cap can be paid through the normal channels. It is getting paid, so most of it is getting paid. Some of it could be remaining as rupee balances in SRBI accounts. So don't include the trade balance of 40 billion or something to the amount that must remain within the country.
The forecast or the calculation is somewhere between $10 billion to $22 billion is the wide range in which the market is forecasting. Is the market right anywhere? Which end are they closer?
No, sorry?
Well tried.
No, I mean, it's not something about which we are really unduly concerned. I mean, we are not concerned very unduly, because market has its estimates, but so far as we are concerned, it's not going to cause any. And very rightly he has pointed out, whatever is imported below $60, it gets paid in the normal course. A part of it is there, so which is quite manageable. It's not as if suddenly one day we will be under pressure to sort of take out that money. And today, also, as I mentioned, with 600 billion, reserves, 600 billion US dollar reserves, I think we are far better placed today to deal with any situation. Last year, for example, after the commencement of the war in Ukraine, I mean, there were market fears that, rupee will crash to depreciate to such and such levels, and various numbers were mentioned in the market. But none of that happened, because RBI was there in the market, and RBI is always there in the market. So we are confident of dealing with such situations if at all they arise, but we don't see that happening.